All right. So, to permit me for one thing, the background noise. Okay. So, how do I analyze the market, right? So, everybody do have their own, how is it called, system of trading, right? And what I'm going to teach is how to utilize smart money's concept, which is SMC, to their own very end. And I'll be showing you how I do take my own trades. I trade to work out best for me. All right. Believe others are here. So let's kickstart. So how do I? First of all, I do top-down analysis. It depends. At times, I do start from 1 month time frame to understand what's going on from higher time frame down to lower time frame. From the market here, price is internally what bearish. Here, we could tell that price is bearish. From this particular endpoint, we could tell that price was bullish. Here, I believe we all can identify bullish and bearish market trends. So, right, then to this end. So now the question is, how do we integrate this particular trading system to suit into our own favor, right? How do we trade it so that we can be profitable long term? So when you look at the market and say, okay, you are to fail to forecast. Of course, you don't dream and execute on monthly time frame. It's not done that way. Okay, it's not done that way. So let's see. This is 1 week time frame. So on 1 week time frame, what do we have? Price. You analyze from the left before coming to the right. So let's see. We have price, right? Taking out previous high. Of course, from an internal perspective, you could tell that that is price flips this low, break the first high, right? Want to see a break of the second high, then these are what structural liquidity. So these are what type one entry model because entry model, our times there might not be any supply here, but this is your entry for sure. So this entry model, so whatever that is liquid gold, all right? You can use it, you can bank on it, you can back test it, right? For you to see how do we be like, okay, oh, this is a what? A bullish what? Market, right? Price creating what? Higher highs and higher lows. Okay, higher high, the higher high, the higher low, the higher high, the higher low. Why the low is being what? Protected. Price is bullish, right? Price is bullish. This is how we understand. Price is what? Is bullish, but an internal range parts. Originally, formally, we do have, okay, so of course it's there. We have your equal highs and equal lows as point of liquidity, but I was speaking extensively based on just these two majorly, which is structural liquidity and inducement, right? So for market, okay, let me make it three. Let me make it three. I'll make it three. Transactional liquidity. Transactional liquidity. All right. Structural liquidity, inducement liquidity, and transactional liquidity. Now, how do we find structural liquidity or inducement or transaction? Right. So whenever price rallies, right? Whenever price, let's say on a bullish market, whenever price creates a high, right? For we to confirm this high, a low should be taken for we to confirm a high. That is true. Example now, when, yeah, that is true. How? Because this high is not yet confirmed until this low is taken. So when price is somewhere here, since this high is not yet confirmed, there's a possibility of chances that price can go upward again. I saying it now. And if price go upward from here, then this low is now what? It's now more confirmed, right? So if you want to deal with high probability, high probability structure, it was that high with the low with first of all what? Be taken out so that what? The high can be what? Confirmed. So that this high can be confirmed. Then what do we want to see? Want to see price does what? Do a breakout. Want to see a first breakout, right? This is what people call break of structure. Yes. So do we enter the market immediately? No. We'll wait for the market to do what? Create liquidity before we now trade. And in the sense of that, when market creates liquidity, it's called what? Structural what? Liquidity. We want to see a second break. Want to see a second break, right? Second break from the market. This second break from the market is what is termed. It's not my fault though. I'm not the creator of the concept, but it's called transactional liquidity. Transactional liquidity occurs when price breaks from a high without taking out liquidity right? That is called what? Transactional liquidity. So once transactional liquidity is being taken, what price has created is what? Structural liquidity. Structural liquidity. Then where are we entering from? Of course, the low that swept the low that swept previous low, right? That's where will be our entry point or our entry position. All right. And that liquidity, once it takes it out, we are hoping that price tap into our POI. Then there are people that do use confirmation entry to trade. Then once it tap into the POI, you look for your confirmation entry. Then price does what? Rally up to take out what? To take out the high, the previous high that was created. In so-called, these are what? TP what? TP level. Same thing also when it's vice versa, when it's on a bearish trend. All right. Want to see two breaks. Once price breaks the first time, I want to see a second break before price takes out what? The liquidity, before price does what? Before price drops. All right. Before price drops. So, like I said, we have three criteria, right? Or three entry model, which we are going to be looking at today. So, if you look from our chart here, you could tell, what do we have? Price swept this high. Let's watch closely. Price high. There were a lot of breaks, right? There were a lot of breaks. So yeah, a lot of breaks. So price was just internally doing its own thing. So what do we have? We have price coming to do what? Take out this particular previous high. Type entry what? 2 model. Watch closely. Like I said, watch closely. See it? This is type entry 2 model playing out there. You see it now? You might not necessarily need a POI. So price tab there, it's rallying down. So we know that our lower low is where in this particular place, what price has been what internally trying to go up, trying to forth. I'm saying it now. When we have okay, so one out of what or downward, let's say something this way, price took out liquidity, right? Create structures. Market will not always present himself perfect. That's the truth of it. Market will not always present himself perfect. It is on your own course for you to master your own best course, for you to master your own pattern and execute it, right? So, okay. When price takes out liquidity, it's externality though. So when price takes out this low and breaks through this particular high, right? Okay, let me use our original one concept first. Okay. Yeah. And breaks through this particular high, right? Even if we have other lower structures that are here, it's the one that took liquidity is the most high probability. Let me say we have something this way. Price check that high, first break, second break, right? And the right took out this particular high, broke, second break again. We'll be coming to this though. So price took out this particular high. This is the first break. This is the second break. So these are what? Liquidity. And our entry model is here. Our entry level is somewhere here, right? But if price seems to take out this particular liquidity, breaks first low and second low, then the POI has now changed to here to become this place. I'm going to show you, and because of that, I missed an entry on guys. So going to show you. So let's get back to business. So entry 2 criteria, right? So let's see. Now, market does not move until liquidity inducement has been what? Has been taken. So let's see. So price dropped. You could tell price took out that particular high, and from the L onward, he has been what? Internally bearish. And price will continue being internally bearish until this low is what is taken. So that is broken or it's being swept. So for sure, we could tell that. So price has been what? Dancing internally here. So let's see. We had what? Inducement. We had a price taking out internal liquidity. So this is a low. Structural liquidity or thereafter. This is an order block mitigated already. So price also took out this particular structural high So it would expand, and from there onward, price has been what? Dropping lower. So let's check daily. This is weekly time frame. So let's check our daily structure. I build my narrative from daily structure before going before using my own time frame to trade, right? I do use daily 1 hour and 5 minutes, and you could tell how lined up it is on my system here. Daily 1 hour and 5 minutes. So you use the one that best fits you, right? Okay, so that's what I use. So let's see. Price swept previous high. So you have to follow price internally. Swept previous high, broke the low here. This is a second break. So this is the liquidity inducement. Where's the POI? Here is the extreme POI, right? Then what happened? Price just took that liquidity and price broke structure. So the major cause is for price to take out liquidity. Price must not every time necessarily tap into your POI. So this is an internal break of structure. All right. Yeah, that's an internal break of structure. So now what do we now have within the range of what? We now have the range of this particular high and this particular low. Okay, so what happened? There was no, excuse me, there was no liquidity. So the high serve as what? As liquidity. Yeah, that's giving us type what? Type 3 entry model vibes. Let me show you again. Okay, I think I did that from weekly time frame. You see it? Type 3 entry model. When there's no inducement, price takes the structural high or low as the what? As liquidity before it expands. So I'm more of a multi-time frame analyst. So price took the high and did what? Created a new low. We know that we are bearish. So now we had what? We had a range of where? Of this high till this low. Are you seeing it now? So you don't have to be bothering yourself mapping out this POI again. Why? Because market has gone past it. Market has gone. So I saw some people mapping this as their POI. Yes, it's a POI. You are not wrong. You are not wrong if you map it as a POI called order block. But what was it called? You could tell that if you are waiting, you're just as if you are waiting in vain because price might not come back there anytime soon, right? So what do we now have? We have the range between this high and this particular low. Do we have our liquidity? So this is our first break of structure and the second break here to confirm this high as our what? Inducement, right? As our inducement. So where do we have as our POI? We have this guy that took out what? Liquidity. I seen it now. We had this guy that took out liquidity as our what? As our POI, right? So now we now have within the range of where. So where is our target now? So now common mistake traders does when they are trading. Common mistake is a common mistake. Now that price has start POI now. Now a lot of people now are not tagging. They're not looking for invisible POI that do not exist. They will map this as a POI where price could turn from. They'll map this as a POI. They also map this as a POI to see how price is going to go there. They also map this in the sense that price should tap and price to buy. Why should price buy when price has reached its zenith where it's going to be dropping from? So price has tapped into this particular POI and price is now doing what? It's now selling. Now, how do you trade this part? Now we now know that the low or the zone next that price is targeting to take out is where is this particular low as the target. This is the low. So whatever stuff that we are doing from here now, from our structural time frame now, is we are going to be looking for sell scenario only. We want to sell. We are not trying to buy. We are trying to sell. If you are in tune with the trend, most probability of trading. When the market was somewhere around here, what you could have been looking for is what? Continuation entry. There are two types of entry that people do take: reversal and continuation. And I found out over time, when it comes to the large market of SMC traders, people love reversal trade than continuation trade. But I'm going to tell us how we could continue a certain trade. Yes, how we can continue a trade even when it's no longer in our POI. right? We are going to see it today. So whatever that we are looking from here is what is bearish, because why? Here the market was what? Was bullish, right? The market was bullish somewhere around this particular zone. But here now, the market is now what? It's not bearish. It's not bearish. So we are not looking for what's it called? We are not looking for buy scenario. We're not looking for sell scenario. Anything that will make it sell, fine. That's what we are after. The cocoa is to take out this particular internal low, because this is an internal low, of course, yes. Because why? Overall, we know that the major low is here, is this particular low here. So price will fight everything that you will do to do what? To trade below. Someone asks, why did price react here? Price reacted there because there was a kind of POI here, unmitigated one, somewhere around here. That was why price reacted. So that you place this as a POI does not mean that it has given this particular trade now an edge for price to just from here now turn over and begin to go up. Market does not work like that. Market does not work like that. Market follow, it is system upon system. So price reacted here because why? Market have over. There's what we call oversold and overbought. It is kind of a relative strength index stuff. When market has oversold towards for a certain period of time, market will look for a way to do what? To buy also for a certain period of time also, right? Respecting some certain orders, right? Before market to not do what? Sell again. It's all about the buying and selling, the buying and selling. So this was a kind of pre-order that was here. So price has to do what? Buy for some time. What is expected of you is what? Is reversal. When price taps into a POI, everybody expects what? A reversal, which depending on your time frame combination on what you use as your reversal time frame. When I'm using daily time frame, the reversal confirmation that I want to see for me to know that totally okay, this guy is going down is 1 hour. All right. I use daily, right? Daily 1H and 5M. 5M as my executional entry. So now that we have taken our due diligence to know the POI that our price is going to react from, now I know that everything that we're doing now is to do is too short. Going fully short. So you could tell from here, I know people be mapping this as a POI, and you could tell they mapped it, it failed. Why did it fail? Because market is no longer interested in buying. Market just wants to do what? Sell. So market will do everything that it's going to do for him to do what? For him to just sell off, right? For him to just sell off. So when price was here, let's see. When price tap into this particular place, what I want to see in this particular time frame is my entry model. I want to see when price tap into a POI, I want to see something like this, right? When price taps, I want to see something like this, a sweep, a break, inducement, then a possible what entry from here, then I begin to shut down, right? But if you look here, market was a kind of callous, right? So to take you some level of understanding before you learn that, okay, oh, it is this guy is already it's already reversing already. It's already reversing. So I didn't get that structure here first. We came to this particular range. Okay, so we came to this particular range. So let's see. First low, price took out here was here. This liquidity. So when price took that, price broke this particular place as what? It's a break of structure. It was ranging here. So that's a break of structure. And possible place where we'll be looking for a potential entry if price wanted to reverse would be where? Somewhere here. But then question, what if market does not come to that your original place again, right? What will you do? Will you kill the market? Of course, you wouldn't kill the market. So what do we have here again? We have market creating something like a structure to tell here this way. To tell the range like this and tap into this particular place and it's what redistributing. Redistributing. So let's say this is our POI. Okay. Remember, all we want to do is to do what? Look for scenario to do what? To trade. So it will take you some level of understanding, right? Should I say understanding? It will take you some level of mastery for you to know when to counter trade. So we will not have a lot of callous time today for we to see how to counter trend, but we'll just follow the trend, okay? So when price tap into this particular POY, what do you want to see? If price tap into my what do I if you what in? So if price tap down to see what 5 minutes confirmation entry, 5 minutes, 5 minutes. My confirmation trade should be on 5 minutes. We had this. We had this first break, right? Second break. So automatically our entry should be where? So we are around this particular place. But what happened? Market left, right? Market left us. So I was waiting for market to do his thing first. Then here again, saw price, did what? Yeah, price broke this high first. This is a sweep entry. So here I was considering this, but I found that somehow I was wrong. So okay, let's use it. Let's use it. So market did what? Market broke this particular low. So confirm this as what? As high. But something happened along the line. So giving us this high as it was, as a POI. But then again, I saw something which in the group, I shared it in the group, that's we are sharing the same group in common. So this is just a sweep. So what happened here? This guy took out previous high, broke first low his own self here. You could tell here. You could tell here. Broke first one, right? And also second one, giving us this high as a what? As our entry. So POI moved from here. I told you that whenever price sweeps previous liquidity and breaks structure, the POI has moved. And guess what? It moved actually. You see? And price does what? Triggered here because, of course, this guy is still what? Liquidity level. So whenever price takes out liquidity, right, and creates a new low and breaks the low again to create liquidity, then, of course, this place now is not your what? It's not your entry. It's not your entry. So where is your target? This particular low is your target. So now you don't have to be killing yourself trading in this POI again. POI has moved. So since POI has moved, you cannot trade from here. Depends on your risk to reward ratio, though. You cannot trade from here down to this particular portion. See now, down to this particular, you let it count. Okay, because there's not enough time. I'll just quickly rush source and static setup that I've taken already. Okay, from the marketplace, so you will learn. All right. So this is a trade that I was to take on Friday. So okay, I took this particular, like I said, phew. So let's see. Why did I buy? Watch here. Market did what? From this time frame, you could tell market swept liquidity, first break and second break, right? And I knew that price is going to go to tap into the higher time frame POI after taking all this liquidity. Price has to tap into this particular POI, right? And price tapped. think these are the setups that I short. Short. I was too short. So me they put this there, I don't understand. So there was a trade that I took on Friday. I think it was a loss. I'll make you show you why it was a loss so you will learn. I think that was the last trade that I took on Friday. Yeah. So I still followed my edge and I still lost. So it happens. It happens. The cocoa is for you to have a good winning streak on your trade. Look at it, them here. You could tell here how many trades that we have got. If had it been I was using a premium plan, I could have at least go here to tell you how all these trades we are being caught, how all we are being caught, right? How all we are being caught. Continuation, you will lose some. You saw this, lost some, but at least your winning streak is going to increase. That's something to bank on. That's something to bank on. So what do I have here? Okay, so I had something here. Price took out major liquidity. Okay, let me show you. From this side, you could tell. So this is a yes. Now look at this structure. Can you see something familiar? Can you see something familiar? What do we have here? Price up here, took out liquidity, did what? This first break, this second break. I saw there's something called daily liquidity when price sweep a previous block. It also a lot of ways that trade. If you check here now, you could tell here, price sweep this particular low. We have an order block here, price broke, giving us this as a structural liquidity. Price could not tap into here. You could tell. So price took out transactional liquidity and price began to rally up. So there was no opportunity for me to trade. Why? Because market is overall what? Overall bullish. I just wanted price to sweep previous low, just like he did here. Watch. Just like he did here. He took out this liquidity. Seen it now, took out that liquidity, created an inducement for me, right? And price didn't sweep it. I was waiting for price to sweep it, but price didn't. Price does his own thing. And of course, people can be able to take advantage on this same trade and make profit. But for my own system, there was no entry for me. So I have to wait. All right. I have to wait. So when price took out external liquidity, I will switch here and show you exactly why I'm looking for that particular. I was shorting. So watch. And then, so let me make this. So see, so when price sweep this particular high, we will now have next here, this low. When price sweeps this particular low, these are what inducements, right? Yes, and where do we have as our entry possibility? This is a new entry, and you can trade up, right? Then secondly, we have under break again. This is the first break. That's if you miss first one. The second break, taking this as our inducement what? As our inducement. Your entries were possibly the next order block or order flow, depending. So these are another flow, this is another flow, and this is another block. So it does depend on which trade are you taking from. So if you check, order flow was mitigated, right? And price did what? Distributed. You tell. But guess what? Me personally, I missed the entry. That's why you could not see it. I mean, because I was more RR conscious because the lower your stop loss, the higher your risk. So I thought market will something here, and my stop loss will be around when I'm trading. There's there are clauses to the trade that I do take. Okay, the max or stop loss that I could use is 20, max 25. I can't go above that in pips. So the first point of this, so this is a good 5 hour. right? But I missed it while I was trading from the other floor, trading from the other block. I believe a lot of us here know the difference between other block and other floor. You could tell. You see, same pattern, nothing changed, same pattern, right? Nothing changed. So where again do we have an entry? So that's 5 minutes executional time frame. So price stops here. Okay, so price went up and price was busy ranging. Okay, price was ranging. Why? Why was it short here? Because on 1 hour, that was the following day I was checking my trade. And also on 1 hour, we had this other block was what? Unmitigated. So you could tell price mitigated that particular POI. Then what do I need? 5 minutes confirmation entry. Abi? And what do I have? CO. Just watch. See? That's my same pattern. As I was saying, based on our pattern model, right? When price taps into a certain POI, of course, a POI, what do you want to see? Want to see a reversal model, right? A reversal. So reversal can be depend. So based on my pattern, though, so I want to see what. I want to first of all see what first high being broken, right? First high being broken from the top so that the low can be confirmed. So I can take that as first break, then second break, then this guy can do what? Can execute thoroughly, just like this. Easy peasy. Just a certain pattern. And you don't need extra pattern when it comes to smart money's concepts. You see, you just need something this way, right? And just trade your way towards what? Towards the target. I believe by now you should know that there's no 100%, there is no setup, there is 100%, right? You could tell this is a missed one. What happened here? You could tell this is a missed trade, not because you missed it, though, but the market just did its own thing, right? So market just came here, did what? Took our liquidity. He just took out the liquidity, the structural liquidity, and did what? And moved. If your entry was here, it could have gotten picked, right? It could have been picked, but for good RR, it was supposed to be here. So market didn't pick us in. So that didn't trigger does not mean that you're a bad trader. Okay, you have to wait for your pairs to be what restructured, because my target was that this low is going to be what is going to be taken. It's called what? Internal range liquidity, IRL. Internal range liquidity. You see, internal range liquidity. So because what? It's liquidity. Why did I say so? Because this, watch here, this is the first break after this guy has been broken from higher time frame. You see, so this is your what? Inducement liquidity. This is your inducement liquidity, IDM, known as IDM, right? Then what do you call this? Inducement again? No, now. Everything was done what? Internally. So this is what? Internal range liquidity. You see, it happened on a range. So this internal range liquidity. So my target was for price to take it out, then tap it this POI, give me a confirmation now before you now do what? Try to buy, or if that zone is going to fail, then no wahala. Understand now? Yeah. So what happened? First high was what? Was swept, right? First break, what do we have again? Second break, price swept it again. Price tapped, you could tell. Market sold for some time. It did like 2 hours first. Yes. Why so? Because I use it to pass my funded challenge, right? You see 2 hours because it was only 2 hours that was remaining for me to close that particular trade. I was risking just 1% per trade. So immediately it went on 2%. Automatically, they closed me out. But on my brokerage account, Xness account, I had a loss. This was the last loss that I had on Friday. I had to just be like, okay, let me just rest. Because it's Friday, right? Because it's Friday. So market will do what it wants to do. But does that mean that you are wrong? No. You keep on doing what? Executing your own system only, right? Your system only. Why? Because with 50% win rate on 3RR, you are profitable. With, in fact, let me even bust your bubbles for you. Do the calculation yourself. I say it on my status today. With 20% win rate or 10R, on 10R, you are profitable. Yes, do the calculation. How? Example now, we have, let's say we have your max entry is 10R, right? Let's say 10R. You funded $100. You lost, let's say you lost $80. That's, you have lost about 80% of the portfolio, right? The remaining 20% is what? $20. True or false? True. So $20 times 10R times 10 is equals to what? Is equals to 200. 200 in brackets minus 80 is what? You're left with 120. So are you still profitable or not? You're up. We still $20 now. So it's profit. Profit is profit. Now they find Lambo. You see, this, if you are consistent like this now, let's say per week, you compound this particular trade per week. That is if you're a bad trader. This is if you are a bad trader. This is if you are a bad trader. This system is if you are a bad trader. Okay, let us do for what's it called? For 50%. But this is if you're a bad trader, right? You can still consecutively be making what? Be making some profit from the market. At least you can still survive the market, because trading is the game of numbers. That's the truth of the game. Trading is a game of numbers. If you're handling prop firm, your mind should already tell you that you don't need to be chasing 20 or 50 RRR. Never. Nay. You should be chasing 50 RRR, 70 RRR. In as much as how important it is to catch a good RRR, at the same time, it is, how will I put it? It is myopic one, and two, it is insensitive, right? Because what's your, how many times do you catch that kind of trade per month? And also you are swinging. I know for some prop, if you are swinging, you will pay for swap fees, that's swap charges, right? That's trade that have stayed over the weekend or over the day, depending on the prop that you are dealing with. You understand now? There are some brokerage that if you are using, they'll charge you for swap fee, which is holding trade over the weekend. You get the point now. So can you survive in the market? You can survive in the market with 20% win rate. You can still survive. When you will not survive, if it is 10, if you are using 10, then your risk to reward should be 20. With yourself, all right? Just be real. You might not catch everything. That's the truth of the game. You might not catch everything. There will be mis-setup, there will be mis-entry, there will be losses. But for your losses to not get in your head, that means you know how to do what? Manage your trade. You understand now? With 60% win rate, I was able to pass all my prop for the year. Right? I was just 60% win rate. Everybody will not have that particular kind of win rate, right? Yes. So even though with 50% win rate, I'll still pass it. Why? Because I know my risk to reward ratio. It's not all about mapping out charts. It's not about finding trade. You can still take 20 trades and still lose your account. You can still hit 10 profits and still lose your account towards 20 trade. Why? That is when you're not being calculative. When you don't know how to manage your account, when you don't know how to risk, that is when you do what? You are likely able to do what? Lose your account. Very, very simple and logical. All right. So I had a loss here, maybe because of Friday, whatever. But I don't blame the market for any stuff. I blame myself. I take full responsibility for every trade that I do take. Right. With that, it helps me cope, and I'll know what I'm doing, what I'm looking out for. So there are some pairs that I trade, there are some pairs that I don't trade. Okay, so if you look here now, let's see here. Right, does what? Total liquidity, you could tell my POI is still there intact. Price broke first high. So my market letter came while it was reversing, switch time frame because price was to take out this liquidity. And I got the continuation entry from there, not reversal, continuation entry. I told you guys that there are two types of entry, reversal and continuation. Reversal is for you to continue a certain trend, right? Why continuation is for you to continue a certain trend that has already been in progress. That is, it has tapped into your POI already and it's moving. Let me go and check a trade that I have like that. You have any trade like that? Don't think so. Okay, let me quickly show you type 2 entry model here. Type 2 entry model there. I've showed you type 1 entry. You have seen type 1. You have seen how it works. Let me show you type 2 entry model here. So what do we have here? Is it this boy? No, this is still type 1. No. This is type 1. This is not what I'm looking for. This is type executed a type 2 entry model. I don't think it's here anymore. Okay, this was the continuation trend. I think I posted it on my status. In fact, I posted this particular one live. So people that traded it, you could attest that it hit CP or not. So it's not about cloth. So you could tell price swept was liquidity. Look well. Look well. There was no other high that took out liquidity. It's only this high that did what? That took out liquidity. Took out liquidity. First break. We had our second break, and this particular entry was what? Our entry. You get this was a good 4-hour trade. And price just moved, tap here, and immediately reversed. Get the point now. So now watch here. Price failed to break through this side. Though I don't like taking short trade. That's the truth of me. I don't like taking short trade because it's I like taking trade from break, right? On that break, then what do we have here? Can you see it? Type 2 entry model. At the beginning of the session, I showed us a type 2. And what's our type 2? Want to see what? Price sweep that particular high, something like this, then price breaks, then price comes to do was take this liquidity, then redistribute again. This is what we want to see. I told you at the initial beginning. Understand? You can go back test it on your chart. Yeah, back test it on your chart. I'm not promising you 100% win rate, but sometimes I don't trade gold. I don't know why, but me, from my own personal standpoint, I don't trade gold. Some of you know I don't trade gold, but if I must trade, then let's see how it goes. So let's see. Price saw this particular high, right? This is first break. This is second break. What does that show you? Show you that this is your next POI. This week, your next POI, right? Your next POI. So what do? This is 1 hour. So I'll switch to my 5 minutes confirmation entry. So what do I have here? I have my sweep here. First here. Right? Then do I have any liquidity here? Don't think so. So this is more or less like a type 2 entry model. I would not consider this as my liquidity. I wouldn't consider this. I wouldn't. Me, from my own end, I wouldn't. Right? So, but some people took it from my group. I told them that it's a low probability trade. But if I want to take, then my entry should be somewhere around this particular high. And did I get triggered? Of course, I didn't get triggered. But let's see if we can still catch up with a trade here. Because I didn't. Some people took the trade. They took this as the liquidity. This low, this guy has the liquidity. Because swept here. Okay. Got to a single candle other block. Ah, shit. So price took out this particular high. This is it. This is the high of the candle, the low of the candle. So it was swept. I didn't trade it. That's the truth of the matter. I didn't, but people traded it. Some of you are even here. So swept here, this high is confirmed, and if it's confirmed, then this guy is your entry. But I was not seeing it that way. Me, I was not seeing it that. I'll be truthful. I was not seeing it that way, so I didn't trade it. That's the truth of the game. I didn't. So if I should trade, then this is where my setup now comes in now. Stand now. Here, sweeps like this. Here, second break again. Then if I should trade, then this is my POI. What happened? Miss entry. If I should trade it, then I will record this as a miss entry. Yes. Oh, yes. I'll record that as a miss entry. So price has taken out liquidity already and price is distributed. But people that took this first advantage, of course, they were in profit. Now, I knew a lot of you people that took that particular trade and made some amount of money, right? But me, I mean, did I trade it? I didn't. Okay, that's the truth. I didn't. So you see, first break, second break, price tapping into POI and distribute. So people that do trade aggressive entry, you see, this is an aggressive profit. People that you use confirmation trade like me, you might likely to do or to miss that particular entry. Understand now? It just depends. It depends, right? It depends on your psychology at that particular moment and what you are seeing at that particular time. So this is GU, right? Yeah. So catch it some couple of times. So when price took out liquidity, dropped, This is another block. This is another block. We call this scope entry, single candle, other block, right? Single candle, other block. Visible only. So it's called single candle, other block. So when price tap there was no confirmation. Let me show you. So this is a continuation trade. I can show you how continuation trade works here now. That's a continuation trade. Why is it a continuation trade? Watch. Price tapped into a POI. See, price tapped into my POI. I could not see any of my entry model here. You could tell. There was none of my entry model here. Because what am I expecting? I'm expecting price to do something like this, right? Sweep that high, then possibly take it out this way, then tap into this particular POI, then redistribute either of the above or a kind of what type 2 entry model. If there's no type 2 entry model, then we're looking for what type 3 entry model. And of course, you know what a type 3 entry model is. If there's no liquidity, right? What are we expecting? Okay, price does think something like this, then price takes this particular high, then redistribute again, right? After taking the first liquidity, right? Break structure. Then if there's no inducement of structural liquidity, there's possibility that this high is going. And I'll show you a trade that I took that took out the low just that way. And price took it and does what? Redistribute. This is type 3 entry model. So none of my type 3 entry model here did what? Was formed, right? What do? Do you begin to chase trade? No, you don't begin to chase. You wait for your own opportunity. For market to do what? Create an opportunity for you. All right? For market to create an opportunity for you. And what do we have?